Okay, good evening, everybody. Hope everyone's okay. Hope everyone is good. Yeah, it's been another tough couple of days. I mean, you take what's happened today out of the equation, and it's not been easy looking. If you're looking at your portfolios or the Bitcoin charts over the last few days. So I'm actually just a second. Okay, yeah, mic is working. Um, so with that, what I thought I'd do, obviously we were chatting in Discord, is I'm going to sort of have a bit of a look at some of the charts, maybe gives a bit of a wake up as to where Bitcoin currently lies. We'll go through that. Then we're going to talk about hopium. Okay, we're going to try and have a look across the charts, see what's happening, see whether or not we are still in a bull market, I suppose, and if so, how quickly that may turn around. Might then just sort of try and tie this all off with a little bit of a reality check again, currently where we are in the cycle. We'll have a look at some charts as always. We'll focus on Bitcoin too, but we'll just try and keep it as flowing as we can. It is the cuddle this weekend, so ideally, if I can get out of this talk within an hour, that would be great. So, without any further ado, let's just jump into the charts, shall we? Bitcoin, 3-day time frame, top of the chart. You can see here a few more lines for those of you that don't turn up on a Friday, because ultimately we need them. So what were we looking at? I mean, we can ignore the 117,000, 109,500. They are, unfortunately, well, hopefully in our future, but certainly not in our immediate concern. What we're really looking at the moment is 93,000 level. We did drop below it, but today, as you can see, we are starting to climb up, and we're having that battle again with the 93,000. Why 93 is so important, and just making sure, actually, you know what, it doesn't matter that my face isn't there, but I will put it on so you can prove I'm alive, I suppose, somewhere. If it comes up, there we go. Why that is important is just this price action that we had sort of through end of the Trump pump, November 24, in that sort of double top that it formed in and around the inauguration into the tariff drop-offs, and then actually that recover out of the tariffs, bit of action there, and then off to the races. But we've come back down. We're challenging that area, and it was quite a sharp and sudden fall down from 100,000 to, let's face it, 89,000. That's sort of over 10% fall in a matter of days. Really caught a lot of people off guard, I suppose. And it's kind of led to where sentiment is, which we're going to look at in a moment. But suffice to say, it's in the toilet. Interestingly, obviously, we are going to look at Bitcoin in a lot more detail in a minute, so I don't think that's the last of it. Interestingly, is Bitcoin dominance, because I've sort of been harking on about Bitcoin dominance, maybe even retesting that 63 level. Bitcoin going to move before altcoins do, but the dominance chart's kind of suggesting differently. And altcoins have bled, but over the last couple of days, they have recovered far faster than Bitcoin itself. And you can see with the dominance here, we have lost this sort of trend line that we've been snaking up. And I know we broke it last week, but I, refused to, not necessarily refused to believe it. I kind of mentioned we were curving over, but I actually thought we'd come back above it. That isn't the case. I think this is a clear breakdown of that trend line at the moment. And if this is going to be sustainable, looking for that retest of 57. Now, I would argue, and this is just me arguing, if prices are going up, then altcoins can absolutely outstrip Bitcoin, and we should see a nice little move into potential alt season. If prices continue to fall, I would argue that altcoins will probably fall faster, and maybe the Bitcoin dominance chart recovers. But that's just something to bear in mind, that actually Bitcoin dominance is falling away. That's what we want to see, obviously. And there's an argument that could be had that this little bounce back up was a reprieve to maybe take the Bitcoin cycle, the bull cycle, out a little bit longer to the right. But we'll dive into that a little bit later on. When we look at the total 2 chart, we can actually see there's a clear and obvious level that we've gone and bounced on. That $1.25 trillion, we came smacking down into that. It's kind of, we wicked to there over the last couple of weeks. Previously, we've hit into it, and then today we have seen that strong bounce from it. I mean, ultimately, we're talking about, what's that, $40 billion in altcoins over the last, I don't know, 16 hours or so. So a fairly strong move from there. There's still a lot of work to do. Let's not kid ourselves. That is not an attractive picture that we've been looking at over the last 6 weeks. And we have seen relief rallies, if you want to call them that, in the past. Sort of here, even over a couple of days here and here. So we're not out of the woods, but every journey to redemption starts with that step, and we need to have that. So what do we need to do? We need to keep on building from that. Unfortunately, let's get rid of these red lines. You know, in my view, if we were just going to eyeball it here, I mean, certainly that level there, 135, but maybe you could actually have a sloping trend line. I don't know if this is going to work, but something kind of like that. Let's get rid of this one for the moment and just sort of say, actually, to break this downtrend, we need to be breaking through this level wherever we interact in it, around about 1.35, 1.34 trillion. I suppose there's another argument to be had that there's some sort of formation there. 3-day, maybe not so pretty, but ultimately that's what we got to break through. And until we do that, I don't think we can get too excited. I'm going to cover a similar chart with Bitcoin later on, and then we can have a look at BitTensor here again, 3-day time frame. And actually, this one is quite good. I think BitTensor has done very respectably today, nearly an 8% on the day. And I know it hasn't quite come down and touched this bottom trend line. I can't remember where it was exactly. Fairly close to sort of hitting that trend line, making a decent bounce from there. When we get onto the other charts, you're going to see that actually it's interacted quite nicely with the Gandalf line at 315, and it's made its move from that. Again, still a bit of work to do because we have been in a pretty strong downtrend from 540. But if we can continue this over the next few days, we've already recovered the last 3-day candle. Granted, 2.5 days to go on this one, so who knows where it's going to go. But again, same sentiment as what I mentioned with Total 2. It's got to start from somewhere. Right, that's where we are on the higher time frames. But let's just have that wake-up call, perhaps, that we need to realistically be looking at with where Bitcoin is. And for me, you know, I've been talking about this for months. 50 EMA on the weekly time frame. We have finally, it wasn't like we were wanting to. We retested it. We have now lost it. Not only have we lost it, we have closed below it, and we're pretty significantly below. We're about 8% below the 50 EMA. Matter of fact, it was such a sharp drop off that the 50 EMA actually, if you zoom in really close, it's actually starting to curve down. But we're looking at about 105,000, sorry, 100,000, 500,000. That's a tongue twister for us to get back above that one. And so there's a bit of work still to be done. I mean, this candle's got 4 or 5 days left within it, so plenty of time for it to do that. But as I've always said, the major, you know, really want to zoom out. Where are we in the cycle? We bull or bear? Just have a look at the 50 EMA, and it'll give you an indication. And once we start to close below it, you know, on a regular basis, that only really happens when we've peaked into the market and we're looking for sort of that bear market down. So I'm not selling anything at the moment, but I am on alert. Okay, that is just where I am. I've been on alert for a while, I suppose, just conscious of where this may take us. And I think we're naive if we just think that shouldn't continue to be happening. This is one of the major indicators that most people use, and again, that could be used against us, I accept, to just try and get that feeling. So, as I say, we will have to monitor this quite carefully. But with that, we can see where sentiment finds itself. We are in 11. 2 days ago, we were at 9. And we're supposed to be at the peak of a bull market, and we're talking about fear and greed at 9, single digits, extreme fear. And it's not just a spike down. We've been in fear for over a month. We've been in extreme fear for a week. So, you know, sentiment really is in the toilet. And when you have a look at where we are, and it is difficult to see it on this chart. I accept that. It's not the easiest to plot against. So when I run my mouse over it, just ignore that. But what I want you to do, if I can draw it here, is look, if I just draw a line, under that line, that's what we're talking about at the moment. We're talking 15 and under in the fear and greed. Let's just have a look at sort of some of the events that we are now associating ourselves with when we're talking about sentiment in the market. The peak fear that was caused by the tariffs. Okay, fair enough. And we're going to come back to that sort of price range a little bit later on. Just about where we were at the carry trade unwind in August of 24. After that, we're talking about bear market. We're talking about the disaster that was FTX collapsing. We're talking about the fear that was caused from 3 Arrows capital collapsing. We're even talking about, it's over here, it's this one, the Terra Luna. For those of you that were around in the 2022, these were incredibly peak fear times in a bear market. But that's where our bull market sentiment currently finds ourselves. Yes, last time we saw this in a bear market, it was when we went from 64,000 to 28,000. Again, most people thinking that the bull market was over. We were entering into a bear market. And hey, there may be parallels with what we're experiencing now for where that is. We keep on going. COVID, March 2020. Week after that, we've got August 19. Now, if any of you were around in August 19, there wasn't really a sort of an event in crypto that caused that. We just happened to have a mini bull run up to 14,000, and then we collapsed all the way back down. So you'll have to forgive me. I think it was 6,000. I can't remember off the top of my head. And then what we're talking about, 2018, this was when we went from 6,000 to 3,000, the bottom of the bear market in 2018. And then just a couple of occasions where we were running out of the bear market, the bull market from 2017 into 2018. The fear and greed's not in there. So we have experienced this level before, but except for one occasion, it's always been associated, actually two occasions, apologies, with a bear market. So you can see why the sentiment, the narrative, and for any of you that are brave enough to go onto crypto Twitter, we may not regurgitate it in our group, but a lot of the stuff I see on my feed is it's over. And this is by the same people that were, calling for extended cycles and everything else. So it's funny how quickly that it changes, but you give it a few days of green and that will lift rapidly. But it's not just crypto. So the fear and greed index here for the actual stock market. Now, earlier on today, this was on 9. It's actually climbed up to 13. But just bear in mind, we're actually pretty close to where we were for all-time highs on the NASDAQ, on the S&P. And yet the market there is talking about extreme fear. And I covered the reason why in my mind on last week's call. And if I just use Forex Factory as a background to why we're talking about it, but just bear in mind that the last time we had any main meaningful data was back end of October with CPI and jobs and all of that because of the government shutdown. But even that was caveated with, might not be 100% accurate. I'm not going to bother skipping back through, but it's September the 10th is when we actually had accurate data for things like CPI and unemployment. Well, not the same day because they don't come out on the same day usually. But that's data all the way back from August. And so where we're getting to with the traditional markets is, although we were in a parabolic run up, the fact now that the data that they're relying on has caused so much uncertainty, they don't know what the data is going to be like when that does get republished next month. And as I said, for just sheer coincidence, CPI next month is the same day as the FOMC. So that's going to be a hell of an interesting day. And this now is reflected in, the Fed watch for where we might go with a rate cut. If you remember, after the last rate cut, this was pretty much 80% for a further rate cut. We're now at 50-50 because the data could just completely skew where we think we are. I will say, I've not been following, but unless the news has changed, Powell did mention that come the 1st of December, they will be turning effectively quantitative tightening off and starting quantitative easing. So we should be starting to see money flood or flush back in. I don't know how fast it's going to happen. But I think the point I'm trying to make here is crypto's in the toilet, sentiment-wise, but so's the stock market. Now, I'm going to talk about both of those a little bit later on. But one of the things that I sort of have that canary in the coal mine sort of thing is, well, what the institution's doing. And I only really ever care about BlackRock, and I'm, 3 weeks of reds, I'm going to be a little bit concerned. And I'm looking at BlackRock at the moment. There's a couple of days there where the market was closed and we have zero, or they just weren't doing anything. Other than that, there's only 2 positive days that they've actually had inflows for their ETF. Everything else has been outflows, and I can't do the maths. But we're probably talking about $1.5 billion worth of outflows over the last 3 weeks. Now, I mean, let's not kid ourselves. They're still sitting on 64,000, give or take, Bitcoin under the belt. So it's not like there's a mass exodus, but it does feel at the moment that the traditional markets, the institutions, are not interested in risk on assets across the board, including our golden goose, that is Bitcoin. And that's reflected with whether it's profit taking or they're just moving it into something that is delivering better returns, even if it's on the short term. So it is a bit of a wake-up call. We can sit there, we can dream, we can hope that the bull market is going to come back. We're going to see and challenge to new all-time highs. But the data that we're seeing at the moment is there's certainly a compelling argument to be made that the top might well have been in, and we're in a bit of a slower burn down than we've usually experienced, but down is the way that we're going to go. And I implore anybody here, even if you don't believe it, to just start to question it a little bit. Just question whether or not it's there. You don't even have to act on it. Just play the devil's advocate against yourself as to why you believe you should still be in the market. And maybe you might surprise yourself, or at least gear yourself up, getting ready to ultimately go into it. Now, I was watching a YouTuber today that used this chart, which again, I think it is a sentiment chart, but it also just shows you where we currently are. So this is the short-term holder supply, and it gives a profit and loss ratio within it. Now, short-term holders for Bitcoin is anyone that has bought Bitcoin in the last 155 days. The chart that you can kind of see in front of you is the entire life history of Bitcoin. And then we've got this red, amber, and green ticks up and down, which kind of shows where the short-term holders are, whether they're in profit or whether they are in loss. But just have a look right on the edge. I will zoom in a minute, but right on the edge, sorry if anyone's watching this on a mobile, we have made the lowest possible indication of loss, negative profit, ever in the history of Bitcoin for all short-term holders. Every single person that has bought Bitcoin in the last 155 days is in a loss. I suppose, barring what's happened over the last few hours, if someone bought 89,000. But let's just say close of play yesterday. Every single person that bought prior to that in 154 days is at a loss, which is a wild statement to make, but it kind of just reflects where sentiment is and how brutal this has been for us. And short-term holders typically are retail, although there's an argument to be made that with institutional investments buying all the time, they need to be washed in that as well. But typically it's retail. Retail are the ones that are ultimately getting screwed. However, with that, I've always got a bit of a tinfoil hat on when we start hearing about these things, because I believe in market makers. That I believe that market makers will do the opposite of what we think they're going to do so that they can manipulate the market. And I think this is where we get into the first conversation about a hopium, actually, because we have had 6 weeks effectively of sustained falling. The sellers have been relentless. But what is it I always say about market makers? They're not selling when the price is going down. That's when they're buying, okay? They're selling when the price is going up to 126,000. They are, if it is market makers driving the price down, they are driving the price down lower so they can buy it on the way down, and then they're going to turn it around. And then you get news articles like this. The Bitcoin whales, the wallet addresses of Bitcoin whales are actually increasing. They're swelling. You see, they're buying Bitcoin. Maybe not institutions, but Bitcoin whales are buying Bitcoin during this period of extreme fear. And it makes sense. Like, what is the best thing to do? When there's blood on the streets, we buy. And ultimately, that's what the whales are doing. That's what the long-term Bitcoin holders are doing. That's what smart money is doing. Whilst retail are, paper handing it, shit in the bed, whatever term you want to use, and giving into the fear that's being caused. And we're right to be concerned at where price is going, but we should start looking at both sides of things and say, well, wait a second, why is it moving down? And are people who are better positioned than we are, what are they doing with Bitcoin? You can go through the article. I'll post it in afterwards. It kind of gives you all the data from Glassnodes, etc. But ultimately, that is where that is going. I didn't actually update this chart, so you'll have to forgive me. But for those of you that have been on Discord this week, I tried to spread a bit of hopium yesterday with a few charts and my thoughts on where things are going. And we'll have a look at some of those charts again. But just looking at this typical 12-hour chart that I've used for a long time, it's given us an indication of liquidation levels as well as fib levels. So Friday, I was talking about the 1618 level, that 94,000 level, holding us for the time being. And I thought that would be the level that we ultimately stop at, or at least take a respite. But we did talk about this area of liquidations is probably going to be just too tempting, and a wick down into that to clear that out is for me, probably what's going to go on and happen. And just have a look when we zoom in a bit closer. That wick down yesterday just perfectly cleared this out. Okay, 87,500. We got 89,000. Apologies. We got down to 89,260, and that liquidation level has been there since April, since climbing out of the tariff. So, we're talking about 6 months. People that have placed long 6 months ago, and they've finally been retargeted back here, and so they've wiped that out. Now, as I say, I didn't check this today, so maybe there's another zone within here, but the next zone after that, 83,000 and below, and that goes back to, again, early April of this year. But we have had that clean bounce from there, and for me, if this was just a dip down within it, I would expect to see over the next couple of days us climbing back above that $94,000 level, back above that 1.618 level, which, again, go back over them. This fib level for me, until it breaks, I'm using it. It's worked for so long. It's worth me keeping. But that's the target I would be suggesting that it'd have to get above and start building from that. Then we can start to have a look. And again, there will be, we can get rid of this and this. There will be levels somewhere. I don't know where they're going to be. There's going to be some sort of liquidation level up here that's going to be building. And I imagine there's probably one in and around that 87 level there. It's just been, degens trying to bounce in from here. But if we can get above that 94 level, build from that, and then make that move up, we can start to have that conversation about recovering out of this. Some of the charts that I posted in Discord. So this is a fib retracement. What I've done is I've taken it. I prefer to work body to body. It is on the weekly time frame, and I appreciate you can use wick to wick, but I've used body to body, and I've drawn it from the April lows to the all-time high, and just have a look. It's respected these levels as we've gone up quite nicely. And what's it come back down to? Of course, the one and only 618 level, the golden ratio. Yes, it's wicked through it, but as it currently sits at the moment, resting on that. So not saying it can be the only place it turns around, but it would make sense if we do get a bounce to find that we bounce from this level. Granted, 98,000 is going to have to be a point that we're going to have to get through, but given it didn't hold much strength for us on the way down, there's no reason why we can't look to move back up there. But just pointing out that the 618 has worked quite nicely in holding it at the moment. Watch that be obliterated come Friday when we have this conversation again. And then, if we want to talk about drops, so this, hopefully you can see it all. Not quite. Let's just move this around. I'll zoom in. Don't worry. What you can see on you at the moment is Bitcoin weekly time frame. Far left-hand side is effectively the end of the bear market in 2022. And all that I've done is I've just sort of taken price range tool, and I've just looked at major dips during this entire bull run. And there are 6 occasions, not 7 if you include what we're doing at the moment, but I haven't marked it out yet, where Bitcoin has experienced a 20% or greater pullback in price. And each time it did that, especially in the early days, is when we were, a bit nervous and a bit apprehensive about coming out of the bear market. It was frightening. We were like, oh no, are we just being faked out of this? We're going to head back down. And I already showed you the fear and greed that was kind of represented with these drops. But just have a look at some of these figures, especially the last two, both of them 33% drops over periods in which we had ranged for a considerable amount of time. And now look where we currently find ourselves. Top to bottom at the moment of this drop finds us at just under 30%, 29%. So this feels painful for us, in my opinion, because we're not used to it. We're in bull market mode. We're in drops, they happen, they're quickly bought back up. And we talk about it from 2017 and 2021 cycle, but we kind of forget how painful they were at the time because we've seen our portfolios swell over this bull market. But funnily enough, if this was a bear market, we wouldn't care about 30% drops because we're used to them. But it's the fact the sentiment is we're in the bull market, these drops really do hurt us. But, and there's no guarantee we can't go further. Of course there isn't. But typically in the 6 major drops that predate the one we're currently going through at the moment, no drop in this market has exceeded 33%. Bearing in mind, carry trade unwind, bearing in mind the tariff fear that was driven across the markets earlier this year. And so, we've got that to work with. Of course, we can go further. If we draw it out to 33%, where's that take us? 84,000, which I think unfortunately could be a logical level. But what the point I'm trying to make here is, so what? If it falls that far, we've experienced it before. Yes, that hurt in April. Yes, it hurt in August. But we've experienced it, and yet we've forgotten about it because highs came straight afterwards. And again, I mentioned this last week, that what we typically see at blow off tops is a much more aggressive, breakdown from the all-time high. So if we take the two tops that occurred in 2021, the November top to bottom from that initial drop, 52% before we saw a bit of a recovery. The April and May drop in 2021, 56% from 64,000 down to 28,000 before we saw that recovery. I'm not going to get into whether that was just a relief bounce that went too high. We'll leave that one there. We go and have a look at the 2017 drop, a 53% drop from 19,000. It is down to 9,000 here before, if you were on the daily, it's had a recovery and then had a further fall all the way down to 5,000 before making a recovery back to 11,000. But a much faster, sharper, stronger drop. And okay, there's only a couple. We could go back to 2013, 2014 and see we had a 70% drop in a matter of weeks there. And granted, that's only 3 or 4 occasions, and it doesn't necessarily mean that we're going to experience that again. But what we haven't seen is that aggressive sell-off. It doesn't matter how far it is. It's been 6 weeks of it drawing out rather than seeing a sharp drop over a 2 or 3 week period. So I'm not saying that is on its own guaranteed. We haven't seen the top. Of course it doesn't, but it at least gives you some hope that actually this just feels more like a steady-ish drop that we've experienced 6 other times during this bull market during the last 3 years, which we have then gone on to make a new all-time high from it. Why have I got this article here? Latest BTC market dip is relatively small, but sentiment is in free fall. And I think this is, I suppose, me trying to summarize what I'd just gone on and said there. It is only a 33% or 30% drop at the moment. And yet for some reason, we have taken ourselves to fear not seeing. I mean, actually, if we go back, God, I'm going to have to clear these and try and find it. Sorry, let me get rid of that. So June, let's just see. So November 21, that was here. So it's at 85. And within a matter of weeks, although we fell 52%, we got down to around about 15. So that massive sharp drop, we only got to 15. Now we're at 9, or we got as low as 9. And we've only fallen 30%. It just doesn't seem, in my mind, to make sense. And I think just we as retailers are just reacting to that far more irrationally than perhaps we should do. I don't think there's anything else now I want to look at. So here is Bitcoin weekly time frame on the linear, not on the logarithmic, which I usually have. You could say I'm trend fitting that, but I'm trying to give you a bit of hope here, remember. So we've got fear and greed down at the bottom, which we've kind of talked about. Just bear in mind, this is only 15 because it's on the weekly. If we went onto the daily, you'd see that it actually dropped lower. I'll do it just so I can prove the point. It's down there at 9, 8. But I'll go back to the weekly for this. But just have a look. Bitcoin has fallen with the fear driving the price down. And what's it run into? Perfectly. Long-term trend support, which we have retested in the past, dating all the way back to September 23. So sustained a year out of 9 months out of the bear phase into the bull run, and then sort of that kickoff level from 27,000, hyper the ETFs in an institutional investment. We've come back and we've retested it. We've retested it here. And again, this is another level that we can then watch to see, well, if we lose that, maybe we start needing to have that conversation again about where things are going. But as we currently stand, a very clean bounce from that. and a move, hopefully, in the right direction back up. And I'm supposed to die on this hill that blood in the streets, you buy. It may be short lived, and we'll come back onto that a little bit later on. But with sentiment as low as it is, with that much fear in the market, with that much sell pressure, but smart money buying it, even if it's only a relief rally, something should be expected around the corner. And it is that movement next that I think will really tell us where we are in the market, which I'll explain in a moment. I've gone on and talked about this over it again, but that was me going back over the fear and greed. And isn't it funny that some of the stories that we have actually also been getting over the last couple of weeks? So we heard that strategy was selling Bitcoin because they were gone broke. People were talking about sort of the NAV, so the value of the MSTR stock versus how much you actually invest in Bitcoin had gone negative for the first time in years and all this. And it was just sort of pumping out all of these stories to try and unsettle us a little bit more. And it got to the point where actually Saylor himself had to actually get onto Twitter and say, look, we haven't been selling. We're just moving things around. Don't just have a look at our wallet history and see that we have moved stuff and automatically assume that's selling. We're just housekeeping. And so he's come out, hopefully you can see down here, there is no truth to this rumor. He goes on to make a few more articles about it. And then there's also another thing. I came across this today, so I'm probably stretching, but when you want to have a look at on-chain metrics, and someone's asked me to have a look at those a little bit later on, and I will. But actually, the relationship between Bitcoin futures and sellers, spot sellers at the moment, although it has gone negative, that typically only occurs, at the very end, on the 7-day time frame, I should say, right at the bottom, 7-day average, right at the bottom of sort of price depreciation before we see some sort of relief rally. This article goes on to explain how this is happening again, and we're getting to that point right now where actually the futures versus spot percentage is in a position right now where it's fairly exhausted, and we should see that bounce and that recovery from that one. And then I'll take you back to, it's a different way of looking at it, but this is the short-term holders profit chart. So the one that I showed you here, but this one is done by, I don't know if any of you follow him, The Rational Root. He's the guy who walks around, he doesn't want to be doxxed, so he has a carrot on his head whenever he's in public. Anyway, doesn't necessarily matter. I get his newsletter. This came out today. And yes, it tells the same story about how the green line short-term holders profit is rock bottom right now, but I'm not actually interested in that. Let's have a look at the actual red bars that are associated with it, because every time we get down to this incredibly low level, what happens? We see that sharp increase in price. We see a relief rally of some sort, if not a continuation into all-time high territories. We saw that after the tariff fiasco in April. We saw it after the carry trade. We saw it after, what was this? September 23. I'm testing myself here. That wasn't the banking crisis. I'm not sure what that one was, to be honest. Bear market, even in the bear markets, we see that when we hit this, they are only relief rallies, but we see those spikes. I think I've already at least tried to prove that I don't think we're quite in the bear market yet, so we're maybe not looking at that sentiment. But again, after the fall away from the all-time high in April of 2021, we found our bottom. We started making these profit reset signals that indicated in the red bars. What do we see? Strong move up there. So there's no guarantee of when the time frame is, but just given where sentiment is, given how much selling we've had, given where the RSI is, which I didn't even bringing up, given how short-term holders have bled out for as long as they have, given that Bitcoin whales are buying up, it seems to me that we should see, and it is just should, a relief rally as a minimum coming up, and we can have a look at targets of where that needs to go to prove whether it's just a relief rally or a continuation into the all-time high in a moment. And then finally, you knew I was going to have to talk about it at some stage because everyone on Twitter is the death cross. Now, forgive the image here. Bijan posted this in Discord, and I just cut and copied it across, and it's a bit blurry, but I will, I'll just utilize it and talk it over. But ultimately, that death cross has now occurred. So that's when the 50 and the 200 EMAs cross over each other, typically considered a very bearish element of TA. But in bull markets, we still do get depth crosses, but they actually tend to signify or to relate to the bottoms of sell-offs. And although this is, not an exact science, when they cross that, it's the guaranteed bottom. We have only just a couple of days ago had that bottom. We've seen some further falling, but the point now is that can we now see climbing out of that? And this chart here kind of details all of the previous depth crosses for Bitcoin, going back to 2014, and how price has done immediately afterwards. Now, you can curve fit this however you want. I think really, given where we are in cycles, 3 months is all we should really be looking at. There's no guarantee that we are going to see a bull run extend further than that. And if you leave it a year or two, of course we're going to recover, because Bitcoin cycles work like that. But most of the occasions, there are some, particularly 2018. So 2018, 2019, 2022, where we're in bear markets, it doesn't necessarily happen that way. But the vast majority of the time, whether it's 2 weeks or 4 weeks, we are seeing that Bitcoin's price has actually increased beyond the price that the depth cross was at the time it happened. And again, no guarantee that that is going to happen to us, of course. But again, another compelling argument to suggest that the selling has happened, we've fallen away as hard as we are. Now a beautiful bit of simplistic TAs around the corner, which is going to get everyone even a little bit more scared. Market makers can do their thing and reverse the price from that one. So I think it's definitely worth keeping an eye out for it. No guarantee that it's there, but I think there is more compelling evidence to suggest that a relief rally is on its way rather than continued falling. That being said, I do think that targets such as 83 for this here, which is this liquidation block, but also that 84,000, that 33% down, is a level. And if I have to absolutely say it, I'll get a weekly time frame up. Not that one. Why can't I find just a chart here? Let's get rid of this. Let's just hide these for now. The reality is, we could go all the way down to, say, 78,000 and climb out of that, and it still be a bullish structure. So I personally find myself in a difficult position, because I spider senses are going, we're below the 50 EMA, trying not to react to that. Want to see how price does it. Price suddenly falls aggressively over the next week down to that 75,000. That's difficult for me, because again, an ideal area for it to bounce. But if it doesn't, and I'm still waiting for a couple of candles under the 50 EMA to close, I'm giving back a lot to the market. But that's kind of the risk that we sort of find ourselves in at the moment. And that's just the swimming pool that I am paddling in right now. And of course, as always, I'll let you know what I'm going to do and when I do it. But as I say, right now, haven't sold anything. Maybe I should have sold some of the altcoins like TAL that I had, but I haven't. Still sat on those and going through. Okay. I'm going to get into some proper charting in a moment, but forgive me, I can't remember who asked me to go over some of the bull market peak indicators. And I can't quite decide if this is hopium or this is just suggesting that actually this way of tracking the tops might well be broken, because, and I hate to say it, maybe this time it's different. But this is not my list. This is a list very similar to the list that I did at the Cuddle a fair few months back. And this is on CoinGlass, and it effectively lists 30 different indicators that you could use or have been used to try and target where market tops have been had. Long and short of it, not a single one of those has currently hit. So from a hopium point of view, all of these have had a level of success over previous bull market indicators. That's why they're on the list. And not a single one of them has hit to say that we're near the market top. So from that point of view, you could go, well, on-chain data is telling me we've still got plenty of time to run. We know the last 10% runs harder and faster than the previous 90. And so we just got to suck it up, and these will start popping off as we get a little bit closer. And to some extent, fine, we can accept that. But if we just have a look at a couple of them, and those that I can stick on a trading view chart, I will, and then the rest we'll just have to do on the not very user-friendly charts there. So Pi Cycle is the is the one that everybody loves to talk about, because that seems to have been able to pick the market top. It's supposed to be plus or minus 3 days. I think the past 2 times it's happened, it's actually picked market tops bang on. Again, 2021 depends on which cycle top we want to have a look at, but all on-chain analytics suggested cycle top was in April of 2021. But if we have a look at where the Pi cycle top is at the moment, remember this is the 111 EMA and the 365 EMA, one of them squared, can't remember which. Look at it yourself if you're interested. But these are nowhere near each other. And these are incredibly far apart. And it's going to be very difficult to forward project where they are. We can have a look. We know that they can stay wide for a while, but then, you know, once price starts to really rally up, these will converge on each other. And I think because we've had periods of just sustained sideways action, and yes, healthy moves up, but maybe, you know, a 50% move up or a 25% move up, and then another long period. These have never really had that massive change and shift in price in which they have really started to aggressively close on each other. And so I couldn't put a price range on this, but, you know, even if we saw a movement that we, I mean, it's probably about this wide. So it would be, say, beginning of July 2020 to April 21. So we're talking 9 months. 9 months from now, we'd be talking midsummer next year, assuming that we saw a stellar rise similar to what we saw here, which is a 6x, nearly a 7x. I don't know. I mean, I'm not ruling the Pi cycle out. Just bear in mind, this is the 2021 was the only cycle top it actually predicted in real time. All the others were done afterwards, and they fitted. Don't get me wrong, but they were done after the fact because the Pi cycle was only invented 2019, so after 2017 and before cycle top. So maybe that one, as good as it has been, maybe we just need to give it a pinch of salt. Right, let's clear those. Let's have a look at some of the other ones. Golden multiplier. Apologies if you can't really see it. I'm just trying to. Previous cycles, you know, we're looking at it hitting these sort of levels up here. The multiplier, if it hit green, it'd be 164,000. To hit red, it's 205,000. I mean, right now, I don't know if this one is broken because never before in a bull run have we been below the orange, and yet that's where we find ourselves now. So maybe this one isn't one to follow anymore, but it's on the list. But we need another 70,000 minimum to get it there. No time scale for when it is, but we're certainly nowhere near that. Investor tool, again, you know, below the green is extremely fair value. Go and buy it. When it starts to touch the red, it's getting overheated and we need to sell. And I'm being honest with you here, this one's at 440,000, and even the most optimistic offers have got to try and suggest that actually that one feels a long way off. That is a lot of money coming into the market. We'll be talking about significantly extended cycle. To the right hand side, for Bitcoin to get to 400,000, we're talking about an $8 trillion market cap there. 8.5 trillion probably. That's just the Bitcoin, not overall. So maybe, I'm not saying far-fetched, but maybe a little bit difficult to achieve. And then down on the bottom, I made it far too large now. This is the pool multiple. Why won't this go any? It does one or the other, can't do both. So you can see Bitcoin's price here and then the pool multiple. And what we're looking for is these large spikes into selling. And I can't remember the exact level. I think it's like if it's above 3, it's where it needs to go. And it's been decreasing over time. We need to get to 3. At the moment, we're at 0.78. So, you know, we're nowhere near that one. Yes, it can happen fast. We can see it. When I say fast, we're talking a couple of months minimum. So this one is also suggesting we're nowhere near it. And the previous all-time high in October, we were only looking at about a 1.32. So that would have been well off what we would have anticipated for that indicator. Now we're going to have to go on to some of these ones. And I won't go through them all. Maybe just some of the big ones. I think we might have just done this one. It is the golden ratio. That's the one there, which we kind of talked about. 164,000 and 205,000. So yeah, I'm not going to be able to zoom in on these. I will do that, but they're not the most user-friendly charts, these ones, I'm afraid. So no, not that one. We've done that one. MVRV Z score, another good one. It looks very similar to the pool multiple. In this instance here, we're waiting to see it spike again. We're thinking it's going to get above 5 in terms of its spike. The green line is what we're looking for it to spike. And right now, we're not near that. We're at 2.7 and the all-time high was 2.5. In fact, price in December of last year, which was only 160,000, was at 3.3, so a far higher level than where we are. So this one is either broken or we've still got quite a way for it to go. So you can kind of see now, whoever did ask this, why so many of these are not necessarily triggering. The only one that has any chance of triggering, in my opinion, soon, and it has done it in the past, I can't find it, is the altcoin season indicator. And when it's in the blue, that ticks, and we had that in September. But as I've said so many times before, alt seasons burn bright, they burn quick, and they burn short, and that's what that happens. So it's not aligning with where price has been. So I don't check these as often as I probably should, but I just don't feel that they're really giving a good reflection right now. And that could just be because we're way off where the top's going to be, or as I said, the inflow, the steady inflow and buying pressure of Bitcoin that has been brought to us by institutions have kind of tempered on chain. Because yes, we've had a lot of buying from institutions, but we kind of had a lot of selling at the start as well, with Grayscale selling it all off. I know BlackRock et al. Have now been buying it fresh, but I'm not sure how that is factoring in within it. So just try and keep that one in mind going forward. And so, yeah, so little bit of reality check again, and then we'll do some actual diving into the charts for 15 minutes or so before we get out of here. So for me, let's just assume everything I've said in the hopium section is right, and sellers are exhausted, and now is the time that we need to pump out of where we find ourselves. What do we need to see from Bitcoin's price action before we can get excited? Because we are in a downtrend. We've effectively been in a downtrend. Well, certainly since the all-time high, but if you forgive that 2 days that we peaked above the previous all-time high, we've kind of been in a downtrend since August. So I'm back on the 3-day time frame at the moment, and I just want to draw a couple of simple things. And again, I drew these on Friday, but for me, let's get past this line for starters. Simple kind of break the trend. Let's get through here. So in the immediate, I want to see Bitcoin rally up to this line. Don't know how quickly it's going to get to that line, but if it did it in the next week, 103,000. If it takes a couple of weeks, it's going to be that 100,000 level. 100,000 kind of tying in quite nicely with where the 50 EMA will be. If we draw another horizontal line, probably around about that 100,000 level, we can kind of see, if I was on the daily, it'd look a little nicer, I appreciate, but 100,000 has been a good level. 101, I think it is actually, for us. I'll just move it so slightly. We can say, for me then, it's this, I suppose, confluence. Get through this level and this horizontal support at a minimum, and we can have that conversation about, now can we start to close out some of these highs? Can we close out 109,500, 117,000? But until then, if we rally up into this and reject, for me, that's a really bad sign. We've had that relief rally to kind of resettle some of those seller exhaustions, RSI, etc. But we didn't get to break through that. We rally into that and fall away, I might have to change my opinion on what I'm doing, particularly if it takes a couple of weeks and we're closing below the 50 EMA from that one. So that sort of got my attention at the moment. I really want to see what Bitcoin's doing on its next rally. And it will have a rally. Doesn't matter, even if the market's over, it's going to have a rally. It's what it can do when it's on that rally. And if it can't beat some of those levels, if it can't get above that 50 EMA, can't break through this diagonal trend line, can't get through that psychological level of 100,000, etc., then I think we have to seriously consider where we are in this cycle. And that is not going to sit well with people, not just in RT or whatever, but just wider. But as I mentioned in Discord today, the market doesn't owe you anything, doesn't owe me anything. It does not care what price I want any asset to get to, and it doesn't really care how big my portfolio is. It's given me 3 years to make some money. If it's decided that it's over, then if I haven't done it, that's my fault, not the market's fault. So don't convince yourself that, no, well, I'll get another chance at this. Just try now to be as impartial as you possibly can for the next 3 months, 6 months, 3 weeks, whatever it takes. And don't just kid yourself, okay? Please, from someone that's gone through a couple of these before, seen people go through a couple of these, now's the time to find out how you're going to leave this market and to actually start to question it. So that's my realism wrap up at the end. Hopefully you can at least appreciate that honesty there. And you know, let's talk. I will obviously tell you what I think. If you've got another view that you're seeing, let's talk. Let's have that discussion about where we think things are, and we can go from there. Right. Let's get into some charting, shall we? Yes, I'm on the 15-minute time frame because I am in a Zcash long because I just couldn't help myself. But we'll go to Bitcoin and we'll get on this time frame here. So this is where we see things. I mean, some of these lines here, similar to what I've drawn, just, you know, you can see them on the daily now. And look, that 100,000 and that cross, it's still there. That's still what I'm looking at, just no longer on the weekly time frame. Now we can kind of see what there is in our daily time frame. You know, we've got the 10 and we've got the 20 that we got to get through. We're certainly going to be looking to retest that 10 soon because we've been away from it for almost a week, which doesn't normally happen, and we're going to look to retest it. Whether or not we have the ability and the volume and the desire to get to test the 20 EMA, which by the way is right on the 100 level, it's right on the 50 EMA weekly time frame as well, but it's still under that trend line, is another question. But again, we very often, and we have been led by the 20 EMA in this move down. The real test is, even if we do get through this yellow line, even if we do get through that 100K level, there's still the 50 and the 200 EMA above us. So I can, you know, there are vectors here which can guide us in the short term to a retest of the 10 and of the 20. Okay, maybe even giving us that impetus to get to that 100K level. I think they will get taken at some stage, whether unfortunately we go lower first. You know, vectors don't tell us which way we're going first, they just tell us where we're going to end up. I can see that happening. Quite a big gap on the daily time frame between that 98.5 or 99,500 end of vector to the next vector candle, which is 107,500, kind of around the 200 EMA level. So something else is going to have to happen in between that. But yeah, you know, it has been sustained downwards pressure, and since we made an all-time high, the only vectors, apart from the one we're looking at today, the only vectors we've encountered have been negative vectors. They've been red or pink, magenta, whatever color you want to call it. We haven't had any green volume or blue volume until today. Still 3 hours to go. Maybe it turns green and gives us something to go from. But you can see we're just eating into this previous vector here on the way back up. Let's get rid of some of these and then we'll drop onto the lower time frame. 4 hours. There's more vectors for us to have a go at. We can kind of see already we've retested the 10 and the 20. We've actually rejected off the 20 on the 4 hour time frame. So we kind of need some good news to help kickstart that through. Now, I think there is one opportunity of good news which is on the horizon tomorrow, and that's NVIDIA's earning reports. I've not gone into it because we don't normally talk about that kind of stuff. But NVIDIA are posting their earnings tomorrow. Now, doesn't really matter what NVIDIA's price is going to ultimately do, but we need to see if the only, it used to be a $5 trillion, company basically propped up the NASDAQ over the last 3 years. If that is still turning a profit, if that is still forecasting and delivering on revenue and everything else, earnings, then I think we can get a decent kick into the market, because although we may have missed some of that actual economic data I've been talking about, if NVIDIA can be like, well, look, guys, we haven't actually been too hindered over the last 3 months when government was shut down for half of that, then maybe we're going to see some confidence there. that confidence flowing into all risk on assets, maybe giving us a little bit more of a drive there. Sorry, I digressed. But if we don't get that, I can't remember if it's probably after the close. I can't actually remember. Then yeah, we may unfortunately see that move down, that 33% drop, that move to 84,000. And again, the 4 hour is saying, well, we've already, we've come back up, we've retested to the 20. Okay, we've not hit the 50 in a while. But there's no desperate need for us to get back to that. And again, I'll reiterate, the market didn't owe us anything there. So, it may unfortunately roll away from that one and we start to attack these vectors down here. I don't like that being in red. Let's just change to white. So yeah, in terms of how we can get out of this though, we are building on the 10. Okay, and it's only the 10, but we've got to start somewhere. As I said, we can continue to build on that. 20 starts to come back through, and we can then suddenly start to climb up through. There are vectors again to direct us that way there. 50 EMA comes back down. We're talking about 96,000. Still got a way to go before that trend line you can still see in yellow, and the 100 or 101,000 level, psychological level 50 EMA as well. But we've just got to keep on doing it. And even if it is a piece at a time, that's absolutely fine for us to find a bottom. Not to mention, I haven't actually done a count, but if we go down to the hourly, there will probably be, looks like a bit of a double top there. Maybe a drop 1, drop 2, consolidation, drop 3. Hourly, not, I know we haven't got back to the 50s, but this on the 4 hour, maybe we do see a move down first before a W formation forms. And that's what takes us up. Got to keep an eye out for that one as well. If I draw now the hourly, I see that looking a little bit better. See, it does work. You could argue that maybe there was an extra one there, but I think what we've done in those ones, 1, 2, 3 has worked actually quite well. And maybe we just need to see a bit of a move down for them to ultimately springboard back up. So that's something that maybe just a bit of hope for us in how that journey can go. But if we lose, I mean, it sounds obvious when you say it, but if we don't form that W formation and actually it's just a bit of a dead cat bounce, retrace back to the 50 EMA and a continuation back down, again, we're starting over again with those counts and where that's going. Let's go back to the daily. Let's go on to Tau. And that's what I was saying. 50 EMA, sorry, the Gandalf line, 315. 4 of the last 5 days we've been interacting with that, and okay, we may have lost it by a couple of dollars, but ultimately it's held strong. We've actually had a fairly good day today, nice strong bounce from that. That's why it's the Gandalf line. It has done us proud numerous occasions over the last 6-7 months, and a good bounce. What is interesting is, apart from one red day, it's been a fairly low volume move down here. I don't know if it's orchestrated, to be perfectly honest with you, but just a very, even volume wise sort of movement down, nothing out of the ordinary. But we're running into a little bit of trouble. We get above 340, it's a minor victory. We then start to have that conversation 360, 370 with the 20, the 200 and the 50 EMA. That's a difficult time. And in recent discussions, we've kind of talked about that 360. That was another sort of like level we must hold. Sorry, I thought that was 360 here. I know it's in red, apologies, I should have just used a different one. But you can see when we get back up to this, by the time we have that interaction, it's just all of that there to also hold us back. So it's difficult, but we know at some stage those vectors more than likely going to get recovered. So it's not a matter of how, it's just a when. Not an if, it's a when. And we've already seen this one's being eaten into. Maybe we've had enough of a nibble out of that one. But that will happen. It's what we do when it gets back up there, I suppose, isn't it? But yeah, that's the challenge. I'll give us the 10 EMA. I think BitTensor can do it. It's going to be that cluster in that sort of $10 area, 365 to 375, really getting through there. And if BitTensor does anything like it did in October, then no problem whatsoever. But yeah, we need to find something that's going to take us from there. 4 hour, I don't think it's going to tell us too much more. Just a 50 EMA is a bit of a battleground, which is tying in with that 10 EMA on the daily time frame in terms of sort of 340 level to kind of break through. But there are vectors in and around this level 360 that we could perhaps attach ourselves to. 800 and 200 is going to be in our way. Bit of a challenge to get through there. For those that are sort of saying, well, you're not drawing any fibs of recent, I just don't know where the bottom is to draw one, to be honest. I mean, I can. Let's just get rid of all of these so we can just see it a little bit clearer. Just hide everything. And I don't know, do we do... So you do it to there. I don't know, that's the bottom. If we did it to this, came down, I mean, it almost hit that level. I wonder if I extend it to wicks, but no, I don't think it will. I just don't think there's anything we can really draw a decent fib from to kind of guide us on that. So we're kind of just looking at market structure and support and resistance lines, which I identified enough to have to leave them all off. So we'll just have to remember what those were when we come back to them. But yeah, I don't know how BitTensor's ecosystem alpha tokens have been doing with BitTensor falling in general, whether they've sort of seen a move up or a move down from that. But I'm quite happy with how it's found its bottom down here for now, 315, and it started to build from. Again, you know, we can only take it in small steps. We are in a downtrend. We know BitTensor takes some time to get through some downtrends, but its next logical target is 344. You know, taking out this shoulder here, which is the 50 EMA. It's only $10 away. I think it's perfectly doable. And then, as I said, vector zones up at 360 to 375 to move us through into there. Zcash, for those that are sort of looking at trades, why did I get back in? Sort of a bounce down here. I was hoping, I did a little suicidal short for some of you that were watching. I was hoping to try and get to 320. It didn't. Saw that it moved off this line and got in at 574, I think it was. And I'm just not, you know, I'm just happy to ride the risk on this one as it goes up. And I do think if we see an actual recovery in the crypto markets, Zcash, other privacy coins, they're just going to continue with that strong move that we've seen. What I would just, say is that 700 level, it's kind of almost a triple top at the moment. So just need to be cautious as to how we're going to close when we get up there. Sorry, we're not even on the daily. When we get up there. But as you can see on the daily, and I mentioned this, the move has been so aggressive that, you know, even those moves down from 740 to 400 were nowhere near recovering to the 50 EMA, which we haven't touched since September. So we could have a strong move down to 400, say 50 EMA, and it'd still be absolutely fine in terms of market structure. But it's come back and it's been using the 10 and the 20. I mean, it's not quite got down to the 20, but it's pretty darn close on this occasion. And as I said, other things just made me think I'm going to get in on it. BNB, we've had that fall away as we've continued to do. It's been smothered a bit like Bitcoin in terms of the EMAs, but the 200 has acted now this month as a fairly good catcher, and we've had a bounce from. We're getting squeezed right now, and again, you know, if an alt season's coming, this will break through. You know, this, you know, it's not like everything's going to move except for BNB. BNB has done very well this cycle, and I think it will continue to do that. ETH, on the other hand, not delivered very well this cycle, and it has been sluggish, and it has been one of the main reasons why Bitcoin dominance has remained as high as it is. Now it's continued down. We are, you know, just about having a death cross. Still got probably a couple more days until that happens. But the EMA has been holding strong. We did lose that 3,000 level we were talking about back down to this EMA. Whether or not it closes some of these, I think if the market turns in general, obviously these are getting taken. But I think, you know, we've been eating into some of these previous vectors that were here. They've gone now. And this 800 EMA daily time frame, very strong level, has acted pretty well. I think we could easily consolidate from this and look to build. But we're just looking for a bottoming pattern to kind of give us that reassurance that that's the way it's going. I'm just going to go through some of the other ones. Dominance, we can see it's fallen. I mean, we've lost 59 since we were talking, 58.99, but we have gone and lost it. And that move down to that base there, that 57,000 sorry, 57.7% 800 EMA. I think we could have that. And as I say, that 2% drop will be a decent uplift on the altcoins. ETH BTC, you have to do this on the linear. We're still quite a way below that level. But, we want a real alt season. Yes, we got to break through that. We've also got to take out this 0.4 level from previous. VIX is climbing. Just bear that in mind. I appreciate, more to do with traditional markets. When it's high, you buy. You get above 30, we might have the volatility we need. And that's been reflected because, as I said, NASDAQ is falling below the 50 EMA. And just bear in mind, 13 on the fear and greed. We're 7% below all-time high after an absolute monumental run, not just this year, but in years gone by. And yet we're down at 13. Something just doesn't feel right for me in that. Similar story with, that's the Russell, with the S&P. Again, we're retesting back to the 50. We have closed currently below it, but we haven't taken out that low from October, the mental health day crash. So it's still there. Gold and silver. Gold had that run up, failed second attempt. I think there's a real discussion now. Let's just call it the 4,000 level. Whether or not that's a topping pattern and we lose it, I think could be an interesting conversation to be had. And again, if we start getting some good data, whether it's NVIDIA, whether it's CPI data that's going to convince risk on assets to kick in, we're going to see money move out of gold, profit to be taken after a monumental run up, and move into the risk assets. Silver looking similar, although at least had a better effort at that. Coinbase, Circle, MicroStrategy, they're all similar place. In NVIDIA, again, down. Just see what happens tomorrow with that one. Palantir, for me, I should have probably taken some profit. I haven't, but we are where we are. It's a bit of a longer term hold, so fine. TauX is just bouncing. Matter of fact, on Friday, we talked about that 200 EMA. It's come down into that, but we're getting squeezed here. And it only really seems to have these big moves when we hear about your cash injections, so something to think about. Tesla's still doing okay. Okay, it's lost its 50. It's down into the 400s. There's plenty of vectors to go. 360 is an easy target in my opinion. But what's it do when it gets down there? I think that's probably going to be it. Let's have a look at what everyone said in terms of the poll. A vast majority of you think that the bottom's in. 89 was the bottom. It's time to climb. And then I suppose 58% didn't know exactly where it was, but you were spread between somewhere else, but lower than now. 84, and not many think we're going to get down to 75. Thanks to those that did vote. It'd be just to try and gauge where sentiment was. No one asked any questions. Sorry, I didn't actually check. Apologies on that. But I think that's probably it. We've got the cuddle or whatever it's called this weekend. I haven't written my presentation. 15 minutes to talk about Bitcoin. You can talk about it for 8 hours. It's really hard to try and condense it down. But more importantly, for those of you that are coming, I can't wait to meet you all, speak to you all, have a jolly good drink in the bar with you all, and just, see how it goes. Until then, look, that price has given us a wake-up call. I'm not saying that wake-up call is telling us it's over. It's just that, in my opinion, now is the time where we need to either reevaluate our convictions and the courage that it takes for that, or we start to look to see if we've been wrong, we've been hoodwinked. And it's no harm in doing that. You could just spend an hour one day just doing it, and then you're fine. But I think where price currently sits, it is a good time to do that. So please do have a look at it. Enjoy the rest of your week. I assume there will be a trading pub on Thursday. There will be no charting on Friday because I'm traveling down. And if it's anything like most of the times, I'll be panicked trying to create my slides. So we won't do that. But look, I'll be in Discord as I always am, chatting over where price is going. Enjoy the rest of your week. Enjoy the rest of your evening. And if you've got any questions, hit me up. Otherwise, I'll speak to you all soon. Cheers now.